Welcome back to Simple Mind Space, the podcast dedicated to helping you unlock your financial potential and live life on your own terms. Today, we're diving deep into the world of investing. Forget the jargon and complicated strategies. We're going back to basics, demystifying the process, and showing you how to get started, even if you're starting with a small amount. Let me take you back to 1985. Picture this. A young guy, fresh out of high school, decides to dip his toes into the world of investing. He's excited, eager to see his money grow. Boom! Black Monday hits. The stock market takes its biggest single-day plunge in history. Everyone panics. His friends, who initially thought he was some kind of financial whiz, now urge him to pull out, to cut his losses. But he holds firm, trusting in the long game. And guess what? Slowly, the market recovers. It always does. But just as he starts to breathe easy, the dot-com bubble bursts. The NASDAQ free falls. Again, everyone around him freaks out, echoing the same fears. It's over. Get out while you still can, they cry. But he remembers Black Monday, remembers the resilience of the market, and he holds. More challenges arise. 9/11, the 2008 financial crisis. Each time, the market takes a hit, and each time it recovers, often reaching new heights. Why am I telling you this? Because that young investor was me. I rode the waves of uncertainty, stayed the course, and reaped the rewards. Over those years, the average annual return was a healthy 11.23%. Even with a modest investment of just $250 a month, that translates to over $1.8 million. That, my friends, is the power of long-term investing. Now, I know what you're thinking. Mark, it's easy to say that now. You've already made it. But here's the thing. I didn't start with a trust fund or a secret inheritance. I started with the same doubts and uncertainties that many of you have. So let's break down this investing thing, step by step. Setting up your investment account. The first hurdle is often the most daunting, choosing the right investment platform and account type. It can feel overwhelming with so many options out there. But trust me, it's simpler than you think, especially now that everything can be done online. Gone are the days of calling up a stockbroker for every transaction. Today, we have user-friendly apps like Trading 212. Feel free to explore other options, but for this example, we'll stick with Trading 212 as it's a personal favorite. When choosing an account, aim for a tax-advantaged one. This means you won't be hit with unnecessary taxes on your gains. In the US, look for a Roth IRA. While it has a lower annual contribution limit than its UK counterpart, it offers significant tax advantages in the long run. Depositing money into your account is a breeze. Most apps have straightforward processes, often with multiple funding options like bank transfers or even Apple Pay. The power of index funds, your secret weapon now for the million-dollar question. Literally, where do you invest your money? Here's where things get interesting. You could spend countless hours researching individual stocks, trying to pick the next Amazon or Tesla. But let's be honest, that's a gamble, even for seasoned investors. Instead, let me introduce you to your new best friend, index funds. Think of it like this. Imagine the stock market as a giant music chart. The companies with the highest market value are like the chart-topping songs. They're the big hitters, the ones everyone knows and loves. An index fund, like the S&P 500, is like a playlist of these top hits. It tracks the performance of the 500 largest publicly traded companies in the US. Investing in an index fund is like investing in all of those companies with a single click. You're automatically diversified, which means your risk is spread out. If one company stumbles, it won't tank your entire portfolio. Automate your way to financial freedom now. Here's where it gets even better. Automation. You can set up automatic investments into your chosen index fund, just like my son did. He decided to invest $5 a day, the price of a fancy coffee, into the S&P 500. Guess what? After just 3 months, he's already seeing positive returns. This set-it-and-forget-it approach takes the emotion out of investing and keeps you on track, even when the market gets bumpy. Exploring individual stocks. Tread carefully. While I'm a big advocate for index funds, I understand the allure of individual stocks. There's a certain thrill in trying to spot the next big winner. But if you're just starting out, I urge caution. Investing in individual stocks requires a deeper understanding of market analysis, both technical and fundamental. Technical analysis involves studying price charts and patterns, trying to predict future price movements. Fundamental analysis, on the other hand, focuses on the underlying value of a company, looking at financials, management, and overall market position. The importance of long-term thinking. No matter how you choose to invest, remember this: investing is a marathon, not a sprint. There will be ups and downs, periods of exhilarating growth, and nail-biting dips. The key is to stay the course, ride out the storms, and keep your eyes on the long-term prize. Think of it like planting a tree. You wouldn't dig it up every few months to see if it's growing. You give it time, nurture it, and trust that it will flourish. Investing is the same. Patience and consistency are your allies. The power of compounding, your money's snowball effect. Here's another secret to building wealth: the power of compounding. It's like a snowball rolling downhill, gathering more snow and momentum as it goes. The earlier you start investing, the more time your money has to compound, and the more impressive your returns will be. Let's say you start investing in your 20s, even a small amount each month. Fast forward 30 years, and thanks to the magic of compounding, you'll be amazed at how much your portfolio has grown. Now, imagine waiting until your 30s or 40s to start. You'll still see growth, but the difference in potential returns is significant. The takeaway. So, there you have it. Investing doesn't have to be intimidating or complicated. Start small. Automate your investments into a diversified index fund. Be patient and let the power of compounding work its magic. Remember, the most important investment you can make is in yourself. If you enjoyed today's episode, please hit that like button and subscribe to the channel so you don't miss out on future insights and strategies for achieving financial freedom. Until next time, keep learning, keep growing, and keep striving for your best financial future.